Okay, hello and welcome back to the channel, guys. So, in this video, I'm going to be talking about internal wick structures or hidden base order blocks. Yeah, so we're going to be talking about hidden base order blocks or hidden SND zones. So, what are hidden SND zones, right? These are the order blocks or supply and demand zones that are in a form that we don't actually see them or learn them. So these occur as a result of unmitigated portions of orders that were left behind when the smart money market movers were making their moves. So as a result of pressure or volatility in the market, and prices just triggered in a way that it doesn't make a deep pullback, but in turn it makes these continuation zones. These are the hidden order blocks or supply and demand zones as we talk about them. So these normally these form in such a way that you have a candle right here, right? You have this candle. Let me just use them boxes. I think I used them boxes, right? So you have this candle, right? And you have this candle right here. So you have your two candles like that. Yeah, this is just visible. So if I can drag this down and zoom in a little bit, okay, let me turn that. So yeah, you have something like this, and then you have these wicks that form here and here, damn, and here, boom. So this is what we call a hidden base order block or hidden supply and demand zone. So let me just make, okay, let me make these empty, right? So let me go to my templates here and make this like, I don't know, box 2. Yeah, they become green, okay, and box 2 there. So let's make this empty, an empty box, templates, and then MB there. So this is what we refer to as a hidden order block or a hidden SMB zone, right? If these wicks alternate each other, right? This one facing the top and this the bottom, or the opposite of that, whatever it is, but this is formed as a result of pressure in the market, meaning that liquidity was taken and then the market gets triggered up with a lot of pressure, with high volatility. It means that there are some orders that smart money were trying to put in, but they weren't filled. So these stand as continuation structures, meaning that if price is going lower in such instance, it means that, let me use the brush thing, it means that price will come mitigate these orders and then what? Go lower. But if price was going higher, it means that price will go high and then come back to mitigate these orders before what? Going even longer. So these act as very good potential areas for us to look for buy or sell entries in their respective manners. So let's go to the actual charts and see how these actually how these are actually displayed. So this is the USD CAD on the 4-hour, which is almost recent price action, and as we can see, we started being we started being bullish from USD CAD since these lows here were broken, since these structural highs here were broken. Boom. So we had that break of structure there, and we have that break of structure higher. That isn't straight, but it is not very good at drawing. So when we had that break of structure there, USD CAD just triggered this uptrend, and along with this uptrend, we can see that we had the original order blocks that were here all the way down here, right? So normally for me, I would have taken this wick, or somebody would just use that, but the original order block for me would stand as this wick. As we know, wicks themselves stand as their own S&D zone, because for a wick to be formed, there has to be a down move and an up move. So down here, you will find that there was the last down candle before the up candle in the lower time frames, where we look for confirmations, but that's not important right now. We are talking about hidden base order blocks. So we had that as our original order block or demand zone, but we had this right here as our hidden base order block or hidden demand zone. As you can see, right here. Let me zoom in to the maximum and modify that. As you can see, this candle close and this candle open are in the same line, and these wicks alternate each other, one pointing at the top and the other one at the bottom. So that is what we call a hidden base order block. So, and as you can see, price goes high, comes and tests it, and then goes long. So this is an ultimately beautiful place for you to take an entry, because of course you would have taken an entry here at the first tap with your stop loss just below that, and you take profit above your first take profit above that. And if you are a person that looks to hold this for a long-term swing trade, then that will be your like TP1, um and you would have had, so okay, you would have had this as your shit, this trend line. No, I was looking for this. So you would have had this as your first take profit, and maybe this week as your second, and then maybe lastly here as your final and third take profit. So, and as you can see, this trade runs through all of them. So if you were a person that was looking to hold this trade for a long time, then it was a perfect entry. I mean, that was like what, a 1 to 13 risk reward ratio, which is, I mean, insane. So it was actually a beautiful trade, but we're not talking about trading, we're talking about internal wick structures. So let's go back, and as you can see, price comes and tests it and then continues. So let's look for more examples, right? I think this will have already started to make sense, and not all the time will they be perfectly tested like this. Sometimes they will be tested and they will be liquidated if there are unmitigated zones below it. For example, you have this one right here, right? You have this one right here. It's this, boom. You have this one right here, and boom. So there you have it. And let's zoom in for us to see it clearly. Look at this candle close and this candle open, and then these wicks alternate each other. So that is another beautiful hidden base demand zone or order block. So, and as you can see, price comes, taps it, liquidates it, and this is in form of what I always teach, this absorption. And if you don't know what absorption means, go back to the previous video and find the absorption and displacement video and check it out, then come back to this one. So price comes, taps it, absorbs it, right, clearing all this liquidity below here and then going high, but it fails to break this high, and then it comes to liquidate over these again, meaning that there were untested or unmitigated order blocks below it. So you should always consider this. The best possible way to take good entries is through following mitigation. If you have multiple zones like this, right? You have this zone, you have this zone, you have this zone, and finally you have this zone, the original zone down here. So all of these are valid places for price to come, test, and probably continue high. But you have to notice which one will most likely hold price for a long term, right? And the most valid zone became this one. Why, right? When price triggered this move up, it created liquidity. There was like tons of liquidity all below these swing lows right here, these lows. All of these had liquidity, including this one that came to absorb this liquidity lying here. Yeah, so the most valid one was that, because this just came out to clear this liquidity here, right? This little trend line liquidity here, where retail was just buying up this test, buying up this test, buying up this test, and then boom, cleared, right? And then this just got absorbed, right? First, you left this rejection to trick down traders into thinking that, okay, it's a buy. Well, it's not a buy, right? There was an unmitigated OB or demand zone below it, which was then mitigated, and then price just shot up. So, by the way, using as many demand zones as this will just confuse you, right? The best possible way is to pick out which is your most valid one, right? So I myself would have left that. Why? Because we had this liquidity area here, the swing low here that did not test this, right? So price went fake to test this, leaving this swing low there, and then it continued up, right? Meaning that there were some people who bought off of this area and had their stop losses in here, meaning that this move would have come exactly to clear this liquidity here, take these dumb traders out and then triggered the smart money move, which took price higher. So I think this is it. This is it on this one. So that's all about hidden base order blocks, and um, we'll continue talking more about this, where in the next video I'm going to be refining these and showing you how they actually work. So that being said, don't forget to like, subscribe if you haven't, hit that bell button, and until the next one, guys, peace.